Hey, good morning, everybody. Brian Hoops, Midwest Market Solutions. This is our insider commentaries, video commentaries on the markets Wednesday morning. It's August the 16th, and it's the 13th consecutive morning that producers in the Western Corn Belt have woken up to below normal temperatures. Eventually, this is going to become a major concern to the trade, and one of the forecasters we work with is talking about the high probability that there will be a frost concern scare in early September. And that is really the last chance for a rally here in these grain markets. So the forecast is alive and well yet. That is a risk that's on the table. The market's really not talking about it, but it would send prices sharply higher. I think it's interesting to note that crop conditions that came out this week in the soybeans, 59% good to excellent. Last year at this time we were rated 72% good to excellent, but yet the USDA has a higher yield forecast, 49.4 versus 48.6 last year, and really has a lot of people scratching their heads. Now, poor crop ratings don't necessarily equate as far as yield, but it's indication this crop is not as good as last year, but yet the market believes that it is. And an early frost would send prices sharply higher. No private export sale announcements this morning, but we are in the midst of an Egyptian wheat tender. It doesn't look like the U.S. is going to get any of this business, so the small rally we had in winter wheat prices overnight could be sold back into the market here, and likely will be after the markets reopen this morning. The Minneapolis is higher and leading the charge higher overnight. Double-digit gains in Minneapolis. Rains of 1 to 2 inches in parts of North Dakota are going to produce talk about poor quality of spring wheat crop. And of course, we need a very high quality crop, and also talk of harvest delays for the spring wheat belt. The livestock trade looks to open a little firmer here and follow through buying. Hog weights were up quite a bit over last week, and that should produce some selling in the market this morning. Meanwhile, cattle and feeders should have a little bit of a continuation rally. I think you want to sell that rally, especially if you're a producer in the market here. Look to sell that rally and become a hedger in this market. The supplies are going to be big. We're going to have over 500,000 more head available for slaughter this fall than what we had at this time a year ago. We don't have the shackle space for it, and if cattle weights continue to increase, I think it's going to be a real burden to the market. Now, we probably haven't seen the biggest supply numbers yet, but yet slaughter last week was nearly 11% larger than a year ago. Okay, not a lot of other news. We'll keep you updated